you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. This video is going to be absolutely bonkers, and the data is in, and unemployment and layoffs continue to rock the US. Now, obviously, the labor market appears to be perfectly okay, but I want to bring a point to light. The jobs that we're losing, the full-time, like really good jobs, are being replaced by government jobs. You guys, the Federal Reserve is doing quantitative tightening. The labor market right now is under attack in most metro areas. I know not all metro areas. We've seen even McDonald's start laying off their staff, and now we're starting to see the #1 money management company in the world do additional layoffs. And remember, you guys, BlackRock has already done layoffs in 2023. They're doing more layoffs. And I'm going to tell you guys right now, and we're going to go into this as we make our way through this video, but I'm going to say that it's probably a result of the commercial real estate meltdown. That's the next boot to fall. Commercial real estate is absolutely going to destroy us. There's going to be bailout as a result of commercial real estate. More than likely, that's why BlackRock is laying off their staff. And the other question is if BlackRock isn't doing well, does that mean they're going to sell off assets like single family residences? Those are some of the questions that we're going to answer today. And you guys, please don't forget to like this video, subscribe if you haven't already, shoot me some comments below, and share this video. And real quick, special shout out to Jason Walter. Jason Walter, thanks again, brother, for helping me with this edit. You guys, Jason Walter has been helping me. If you guys need any services regarding editing for video, reach out to Jason Walter. He's huge on YouTube. His info will also be linked in my description. And again, Jason, from the bottom of my heart, thank you, sir. I definitely appreciate you. Now, before we really dig in here, I want you guys to remember that BlackRock has already started laying off middle of 2023. You could see that in this article here. Now, at that time, BlackRock says the new layoffs will affect less than 1% of its staff. So again, mid last year, BlackRock, the biggest money management company in the world, already started doing layoffs. When we fast forward to today, and what I'm about to show you is they're going to lay off 3 times the amount of people that they have already laid off. So the question again, why are they doing this if the economy is so resilient, right? We hear this all the time. The economy is resilient, the labor market's resilient. Then why would one of the biggest, most profitable companies in the world continue to do layoffs? Let's find out. We'll review an article from Fox News titled BlackRock Layoffs Coming as Firm Matures, ESG Pullback, and Bitcoin ETF Approval. Coming layoffs at BlackRock could put as many as 600 employees out of work. Very, very interesting stuff here, guys. BlackRock, the world's largest money management firm, plans to announce layoffs in the coming days of about 3% of its global workforce. The job cuts are around 600 employees, which have yet to be reported and are being described internally as routine. But I'm pretty sure the people that just got laid off or are about to get laid off, it's not very routine for them. So where's the empathy, right? You're not going to get the empathy from BlackRock or Blackstone for that matter, according to a source. Last year, BlackRock did a similar round of layoffs gauged on employee performance metrics. But that's probably what they're just saying, because we already know, you guys, we cannot trust what the suits are telling us. Shares of BlackRock rebounded in 2023, up 6% after falling a whopping 21% in 2022. And you guys want to know what's crazy? When we see companies do layoffs, usually their stock goes up. So when a company, again, lays off their employees because they can no longer afford to keep them, their stock goes up. To me, that's the opposite. To me, that means that, hey, there's something wrong with this company. They're no longer growing. And it rallies because, oh, you laid off a whole bunch of people. Now you don't have to pay as much in labor costs. So, I mean, you guys, think about the system that we're in. I mean, it's absolutely corrupt. I mean, it's stacked on greed, on top of greed, on top of greed. I mean, these companies want to put their hooks in every single consumer, I have zero empathy, but I do have empathy for the people that just got laid off. On Wednesday, BlackRock is expecting approval from the Securities and Exchange Commission for the new Bitcoin spot ETF, the first time a crypto investment product tracking the daily price of the world's most popular digital coin would be approved by security regulators to trade on the public stock market. That is huge for them, guys. And basically what that means is if they get this approved, people can use things like their 401k to basically invest in Bitcoin. Now, I'm not going to go into this too much, but it didn't get approved yet. The SEC responded. They immediately responded back. And I believe there's a total of 13 separate companies that are trying to get some type of Bitcoin ETF approved, but that hasn't happened yet. Let's go jump back into the article. A BlackRock spokesman would not comment on the layoffs. BlackRock is scheduled to announce fourth quarter earnings on Friday. One possible reason for the layoffs is that BlackRock, after years of wild growth in assets under management, or AUM, is settling into a more mature phase in its business. So they say, oh, more mature phase. But again, what about the people that are about to get laid off? The consensus for earnings in its fourth quarter projects 2.46% decline year over year. So again, decline year over year, and yet their stock is going up. I mean, do y'all see the greed? Do y'all see the reckless optimism? This is insane. Okay, so again, BlackRock finished its third quarter of 2023 with what? 9 trillion. I'm sorry. And they can't even afford to keep 3% of their staff, which is only 600 people. Holy smokes. With 9 trillion in AUM through the firm has seen significant asset decline since it reached its peak of more than 10 trillion in 2022 amid a wobbly financial market. So again, the market is starting to show cracks. Big giant companies like this are bleeding money and their assets are not performing, especially, I'm just going to say this right now, in commercial real estate. That's probably exactly what's going on right here. It's a commercial real estate meltdown in the background. They're suffering as a result. They transfer that pain to their employees. A decline in assets also came as BlackRock became a political lightning rod over its embrace of environmental social governance investing, or ESG, which directs investment dollars into public companies in the sustainable energy space, or those that are taking steps to reduce their carbon footprint and advocate corporate governance measures such as boardroom diversity. So that's just blah, 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 blah. The firm has been de-emphasizing its ESG business in the US amid the controversy. Fox Business has learned US portfolio managers are no longer required to consider ESG matrix when using ESG funds. In 2023, many so-called green investment funds have seen declines in asset amid weak performances as investments in sustainable energy products fail to produce significant returns. As top Republicans, including several running for GOP presidential nomination, have attacked BlackRock and ESG, those running pension funds in red states have yanked about $6 billion from BlackRock funds as a form of protest. That's crazy. So they're getting hit like crazy, obviously. Notably quiet from the BlackRock bashing is the GOP frontrunner Donald Trump. One reason may be because BlackRock once managed Trump's fortune, estimated in the billions of dollars. In 2017, Trump said, "Larry did a great job for me. He managed a lot of my money. I have to tell you, he did me great returns." Now, people close to BlackRock tell Fox News that savings from the job cuts would be used to expand into growth business such as technology investing and investing in so-called alternative products as opposed to stocks and bonds. ESG, meanwhile, remains a big business with BlackRock's foreign customers, including large sovereign wealth funds in Europe and the Middle East. So, in other words, there's no more money printing. There's no more low interest rates. We're in a normal environment right now. And these companies that got rich off of, during the lockdowns, during 2020 and 2022 are now starting to come down to reality. And I believe, you guys, that we're going to see more and more institutional investors like this go under or join forces, or some type of event is going to happen because there's not as much money to be made. That's what happens when the Federal Reserve does quantitative tightening. And trust me, guys, we need the quantitative tightening. I know it feels like it's not working, but it is working. It's just, there's just so much greed. There's so much corruption that it takes time for all of this to play out. But if BlackRock is laying off, again, the biggest asset money manager in the world, what do you think is going to happen to smaller, less profitable companies? More than likely, they're going to go out of business too. So my next question was, well, okay, well, if these institutional investors start suffering, will they start selling their assets? Obviously they will. And my next thing was, well, how much, homes does BlackRock own? Now, according to BlackRock, they want to make perfectly clear, okay, this is from BlackRock. They want to make perfectly clear BlackRock is not buying individual houses in the US, and rather they're providing capital for people to purchase and invest in real estate. But according to them, they are not purchasing single-family residences. However, we know Wall Street has purchased hundreds of thousands of single-family homes since the Great Recession. A few bullet points I want to remind you guys. Corporations backed by private equity groups such as Blackstone, not BlackRock, bought tens of thousands of homes across the U.S. Sun Belt. So the reason I'm pointing that out is the problems usually start at the top and they trickle its way down. If you want to follow the money and see how the big players are doing, I mean, look at BlackRock. They are not doing well. Now, obviously, Blackstone is really the company that is responsible for so much single-family resident purchasing over the last few years. So odds are that if those institutional investors start doing layoffs and start suffering, hopefully we'll start seeing them become bigger net sellers of SFRs. And we already see that with Invitation Homes and other institutional investors, because quite frankly, it's not even profitable for them to own real estate. But again, you guys, I suspect unemployment is just going to get worse. I mean, how could it not? We're sitting at only 3.7%, but I don't really think that's a true 3.7%, because the good full-time jobs we are losing is being replaced by government jobs. So to me, that's deceiving. That's not really fair. So again, we haven't even seen unhinged unemployment yet. That phenomena will happen. I suspect it's going to get worse in 2025 as a result of the commercial real estate meltdown. So I definitely think unemployment worse 2025 into 2026. We're going to see more and more layoffs in 2024. We're going to see more and more cracks in 2024, but I'm really interested to hear what you have to say. Do you think that more and more institutional investors are going to continue to lay off their staff, or do you think we're going to head to somehow a magical soft landing? Everything is going to be okay, and all of the US is going to make more money? Because again, remember you guys, if we're to avoid a collapse, if we're to avoid recession, more than likely, the average person is going to have to make about 50% more income. I know we're not capable of that, because the only reason we're in this situation is not because of wage growth. It's because of money printing, guys. What happened is not real. Someone's going to pay the price, and odds are it's going to be the people at the bottom that have their heads in the sand, even the people at the top that have their heads in the sand. So what I'm trying to do is tell you guys, don't keep your head in the sand. There are problems behind the scenes. We don't see it in mainstream media. We don't see it in all the headlines, but we know from the data there are problems. And if you don't believe me, just look at the yield curve inversion. The yield curve inversion is telling us the layoffs aren't even here yet. They're not even here yet, but they are coming. Again, historically, when we look at that, we have a pretty much 100% guarantee we're heading into recession. Now, obviously, it's different this time, and they're doing a crazy amount of bailing out, but only time will tell exactly how the labor market is going to react from all of the quantitative tightening. Now, other than that, guys, if you're out there investing in real estate, you know that I wish you luck, and I hope you win.